Okay, October, right? October is the 10th month of the year. It is notorious when you look at decades of research that October has been down. But as you know, as a follower of seasonality, that simply has not been the case for the last decade, right? As you can take a look here to my right, you'll see that the October surprise might very well be to the upside. I want to talk about this for a little bit. I want to review the money calendar, and then I want to show you the risks that we have found in the month of October. All right, so let's go ahead and do that right now. So our money calendar, which those of you, some of you are brand new to this, so welcome. Our money calendar is a seasonality calendar, right? It is a way that I can look inside the stock market in a minimum of 10 years. And what I'm looking for are 10-year patterns that have a start date and an end date that are on the calendar. The start date is the day. The end date can be something in the future. And so what we're doing is we're looking for patterns that go back 10 years minimum that have at least 90% historical winners. Now, when you're looking at the overall calendar like we are right now, if you see green days, that means the majority of the picks inside that day are bullish. If you see red days, the majority of those picks inside that day are bearish. And then anything in between is a mix. All right. Now, when I go into an actual day for opportunities, I'm looking for this. I'll see the symbols, and I'll recirculate and re-rank the symbols. They'll be based on trade duration. They'll be based on end date. They'll be based on accuracy. And you might say, well, Tom, I mean, you're looking for 90%. Yes, but we also can find some 1 out of 10 or 10 out of 10, 1 out of 1, 10 out of 10, 100% accuracy symbols. I like to look at those. I like to look at average trade profit because that has a lot to do with what I pick. And then I will look at something called the power meter. The power meter is basically looking at the average, really kind of a regression line, if you will, of what is going on with that pattern looking back 10 years. I like to see that line increasing, which tells me that the pattern on average is getting better and better in terms of profits. Now, we put all that together, and this is what the chart looks like for October. Now, what I did here to get this chart, so if you look at the date here, it shows 175 potential candidates. They're all bullish. There's not a single bear. In fact, Tuesday, Wednesday, Thursday, Friday, all bullish. The next week, all bullish except for Thursday. We have one bear, 139 bulls. You look again on the third week, 99, 100, 100, 97, 98. And then we have 197, 98, 199 to round out that full week, that week 4 for October. That's a lot of bull. Is that a lot of bull? Well, we'll talk about that. And by the way, what I did to get this was I'm looking and I'm scanning for those 40 to 60 day patterns. So these are patterns that are going to be going into November and December, not just October, but I'm stretching out the pattern size because what I find is the longer term patterns, they have the least amount of risk to reward. They have the least amount of run up to draw down inside the pattern because we have more time to be right. So with all of this bull, what's the problem? Well, here's the problem. According to Carson Investment Research, take a look at this. There are 9 years, 54, 55, 58, 67, 75, 87, 89, 95, 97, but potentially today, where we've had more than 20% year-to-date returns going into Q4. So tomorrow starts Q4, right? We're right at that precipice of being over 20%. So if returns by the end of September are 20% or greater, this is what we're finding out about October's. Only 22% of the time, going back using the last 9 years of data. All right, so we go back to 1950, and you can see the last 9 years of data, majority of the time, October returns a down month. Now, here's some good news. 1987 was the only time where we had a double-digit drawdown during the month of October when the markets were above 20%. That year, the markets were up almost 33%. They dropped back to a minus 21.8, and then the Q4 return ended up being minus 23.2. But every other situation, we had single-digit drawdown, and many of those actually ended up becoming Q4 positive returns. All right. So what am I telling you here? Based on this data, we do have to potentially worry about drawdown. But if we're pushing ourselves outside of October, if we're pushing ourselves into November, and more importantly, December, we are putting time on our side. All right. So 5 to start the month of October. We got Decker's Outdoors at the top, ASML, TPR, TNA, and AVGO rounds out the bottom 5. These are ranked by power meter. So, you look at Decker's Outdoor, it had the best power meter, and AVGO was number 5 of a lot of stocks, right? Now, I've got AVGO circled for a reason, because out of all 5 of these, AVGO has 14 potential trades in this pattern, and higher is better because there's a lot of clustering that goes on. Now, I say this because just a couple weeks ago, we were looking at AI stocks, and AVGO was in that list as well. So I thought I would look at AVGO again and compare September AVGO to October AVGO. So here's September. The patterns in September, when we were looking at this a few weeks ago, we saw patterns where we were looking at a regression line that was moving higher. And just look at last year, 22.5% for 2023. Now, this was September going into mid-November. This is October going into around the end of December. Look at this regression line too. Look where it ends, 36.18. So starting now going into December, AVGO actually had better returns on average than starting in September and going into November. All right. Let's take a look at the charts. This is the September chart that I just showed you in mid-September. The price of AVGO was at 161.88. We're looking at a target of 195. All right. This is the chart today with Broadcom, AVGO at 172.76. It's already up over 10 points in the last couple of weeks. And that is off of a high that happened at $180 too. So just keep that in mind. We've seen a pullback off of that high. Now we still like the 195 target. It's still intact because if you look at the chart here, the chart is still showing higher lows, higher highs, although this high didn't become a higher high, but it's still maybe yet to be seen. So this is even the target for November. So is there possibly a higher target for December? I say that there is, based on all the data we see going in this December, as well as that extended move when you look at the power meter and you look at the regression lines over the last 10 years. Now, last month, we were looking at those 155 calls. Just a couple weeks ago, they were trading just around 15.78 was the mid price. Look where they were coming into this morning, 22.20, up about 33%. And that's the case for all of these call options. All of them, here's 2 weeks ago, here is today, all up about 30 in the low 30 percentile. So they moved up. So again, have we missed the boat? And that's the big question. And the answer is not necessarily, because again, we've got a new money calendar, we've got a new start date, and we've got a new opportunity. And so with this pattern, you're buying potentially now and holding until the end of December. If you're an option trader, you're resetting new options using December options as your expiration. So our October takeaways for the money calendar look like this. The October patterns are bullish into December, and I'm looking at those 40 to 60-day patterns to try to hedge against an October surprise. AVGO is in the top 5 again with prices higher, but we're also looking at higher targets as well. Are there risks with year-to-date returns so high? Yes, there are. But by taking ourselves out of the next 30 days and putting ourselves into November and December, we are hedging those risks.